I want to start with a word of caution. If you do not have good credit, this will not work. If you do not have a decent job, this will not work. And if you do not have conviction that Bitcoin is going to eat the financial system, this also will not work. You need to be a Bitcoiner with a pretty decent job and good credit for this to work. And even then, I cannot guarantee success. This is not financial advice. But here we go. All right. If you were to come to me and say, hey, I really wish I could be a whole coiner. I want to have gotten into Bitcoin 5 or 10 years ago, but every time I look at the price of Bitcoin, it goes up. And I don't think I'll ever be able to save, what is it now, $120-something thousand. Well, this is a way you could potentially go about borrowing your way to a full Bitcoin using your income as collateral and potentially having your investments pay your monthly bill. Now, this is very risky in that if you lose your job and the investments do not work out, then you are up a creek and this will hurt your credit badly. But what this does not do is give the banks any collateral to take away from you, meaning they can't take your car, they cannot take your house, they cannot take your Bitcoin. You should use your Bitcoin to pay back your loans instead of going into foreclosure, but we're going to get into that right now. If you were to own no Bitcoin and you had, let's say, $5,000 or $10,000 worth of cash on the side, but you make really good income, you can use that income as collateral if you have good credit, meaning you can go to your banks and say, I would like to take out $221,000 worth of loans. It probably won't be one loan, but you can go to different organizations that like to give out money and find different deals out there for personal loans that are uncollateralized against any goods or assets. And when you do that, you will be able to find options like this. I found one that was an 11.96% interest rate for 5 years, offering $75,000 a year. There was another loan offering 10 years, much higher interest rate, but it made it to where the payment was only $1,000 a month. There was another loan that I found very good interest rates on, but it was only offering about $47,000. And the last one was a margin account, meaning that there is risk there. There is a risk that if you over leverage your account, then you can have a margin call where you have to potentially pay more into the brokerage fund so that they don't sell your shares for you. Now, this works best if you already have a Robinhood account that has some money invested in it. And if you can get a hold of $200-something thousand worth of money, borrowing it at different interest rates, something that you can manage. In this case, I'm not going to say I did this, but I would say that I could have. And if I was to, the payments adding up to these different instruments would be $3,800, $3,825. And how I put that money to work, or how I would in this hypothetical world, would be buying one Bitcoin. So let's say Bitcoin's $121,000 right now. I think it just hit an all-time high actually, but we'll pretend it drops a little bit down to 121 and you spend that much buying a full Bitcoin. Let's say you have no Bitcoin right now, yet you're a potential maximalist. And so the odds of that are really low, but the other $100,000 would be split up this way if you had me in your corner advising. This is how I would structure an investment. This is not how I recommend anyone else do it. I'm a believer in strategy. That's why I'm wearing the shirt. And the volatility of their stock is higher than that of Bitcoin. MSTY harvests the volatility out of the stock of MSTY and gives you part of the upside of the company back as dividends every month. And on average, they've been paying over $1 per share. And so I cannot promise that goes forward. And I can almost bet that the dollar per share is going to fall during a bear market. But if we believe, you and I sure do, that the Bitcoin bull market is just starting, I do believe that MSTY can consistently pay over $1 per share going forward, since the fund has never paid less than $1 per share on a 4-week time span. You could potentially buy 4,000 shares at $19 a piece with $76,000. That monthly income could be as low as $2,100 if there was a 50% drop in the shares dividends over the course of a few years. it could go up to over $6,000, where it has been paying traditionally. About $1.50 to $2 has been the range that the stock has typically traded in. The ULTY is more of a general index fund. If the money printer is on, the index of high volatility stocks are also going to be driven higher. And the ULTY has been paying on average 9 to 10 cents per share over the past month or so. They pay on a weekly versus MSTY that pays every 4 weeks. So you can expect anywhere from 300 and change to 700 and change dollars per month with 1,800 shares. STRD is going to be our savings account. We would invest $13,000 and get 150 shares. This would give you $10 per share per year. So you're going to get $1,500, but we're not buying STRD for the income necessarily. We're buying it to be our savings account. I don't believe STRD is almost ever going to fall under $86 per share, because that would just make the interest rate being paid on it far too high. And I believe if there is a bull market, the STRD preferred share from strategy is going to raise in value itself. It'll pay you $125 a month on paper, but in reality, they only pay out per quarter. And so you'd be getting $375 every quarter opposed to $125 a month. My base case has the low end of the income at $2,600 a month, while the base minimum loan payment is $3,800. So that would mean that your fairly decent income is going to need to pay about $1,200 a month, while the passive income is taking care of 2/3 of that payment. Now, this is in a base case where the funds start paying about half of what they have been historically. But the average case scenario, as if you took the current payouts that these funds are paying right now and projected them into the future and used that as an average, you would have your entire monthly payment over the next 5 years paid by these ETFs and preferred stocks. And that would mean that you're not paying anything out of pocket to have one full Bitcoin in custody, cold storage off the internet in a wallet, and $100 and something thousand in your brokerage account. And if you look at all the payouts as they pay right now, if nothing changes or if they go up, you'll be getting more money back every month than you're actually paying out to these loans. That's when I would take the extra and start paying down the debt faster, or investing more, dripping back into the ETF funds, hoping to raise your income next month. So you should be able to be buying more Bitcoin and be buying more of these ETFs to raise your passive income so that the loans are even easier to pay off. The result here is you have a full Bitcoin at the end of 5 years. Hopefully that Bitcoin is worth a whole lot more in purchasing power than it was when you started. You have paid the majority of that Bitcoin off using passive income funds. And you got this Bitcoin at a discount, and you got to pay 2025 pricing over the next 5 years. That'll look very advantageous to anybody who did not get to purchase at today's pricing. The risks here are simple. If you are worried that the value of MSTR and Bitcoin are going to fall over the next 5 years, then don't do this. If you are worried that you might lose your job over the next few years or your income will dramatically drop, don't do this. This is just to show you that it's possible to be a whole coiner still in 2025. Now, as Bitcoin raises to $500,000, $2 million, $10 million, it's going to be harder and harder for the average person to become a whole coiner. And so might be your last chance. And so I don't recommend this strategy, but if you are going to use it, I'm happy to answer any questions in a non-financial advisor role. Thank you. Have a good night.